Oh man, so Bitcoin miners are transferring their Bitcoin to exchanges and dumping a lot of tokens. What is going on? We've got Bitcoin selling at 26,000. More importantly, we are seeing a huge spike in the amount of Bitcoin being moved by miners to exchanges. June 3rd, we saw $70.8 million worth of Bitcoin being moved to exchanges. Remember, the peak we've seen is going back to the early stages of January of 2021 when the inflow was 101 million. Normally, these peaks tend to coincide when Bitcoin is at quite a high price and it then led to the price falling. What is going on? What does this mean for the Bitcoin price? We're going to break that down and a lot more. Keep in mind, we've got the FOMC meeting live later today. Make sure you subscribe with your notification bell on. We will be live streaming to see whether we finally get that Fed rate pause. We're also going to look at the Bitcoin price action shortly, so make sure you smash on the likes and subscribe. Now, let's take a look at this. This is the one-hop addresses for Bitcoin miners. In other words, how much Bitcoin is being held in the addresses which originally receive the fees from mining. And you can see it starting to tick to the downside, which is meaning that once the Bitcoin are being mined, it's being sold off. Now, we need to understand something. Why do miners sell? Miners sell to fund their operations. If you're running a normal business, you have overhead, you have employees, you have the machinery, you have all the other things, electricity and utility bills. Miners have the same thing. They've got to pay for the servers, they've got to pay for the mining equipment, they've got to pay for staff, they've got to pay rent for the warehousing, electricity bills, etc. So they need to fund their operations. Now, all their revenue comes from the mining of Bitcoin on the block rewards. So always, at any given moment in time, miners will need to sell Bitcoin to US dollar fiat to fund their operations. Because the reality of the world currently right now is you need to pay for your operations in fiat currency. So this does not on its own mean that miners are bearish. It just means that they need to fund their operations. Now, of course, with the rise here recently of the network difficulty, we've hit an all-time high on the difficulty here on blockchain. On Bitcoin, sorry. And this happens as the competition continues to increase. As the network computing power continues to increase, the block mining difficulty increases. That's how the algorithm is built. Now, what that therefore does is reduces the profitability for miners. Now, of course, this increasing is very good for the Bitcoin network. This is what gives it the security that nobody can replicate. But at the same time, it means that the miners' revenue will go down because there's so much competition. Now, the other thing we have to face is that total mining revenue, therefore, is falling to the downside, right? If we just take a look at here in the peak here, you had the huge activity caused by ordinals leading to crazy miner revenue being experienced earlier in May. That is now cooled off here in June. So miners are feeling that difference. Because if we take a look here at the transactions on Bitcoin, you had 16.3 million transactions in May. A huge skyscraper of a bar compared to all the previous months here, which always sit at around 8.3, 9 million, a big candle here, 16 million, due largely to ordinals activity on BRC20 tokens. If you're unsure about BRC20, what that means, I've got a super guide here for you guys to go watch that. So make sure you go watch that to get caught up on what's going on with BRC20. But now it looks like in June, we're currently halfway through, we're sitting here at 5.23 million. So if you double that for the rest of June, you're getting to about 10.5 million. It doesn't look like you're going to be getting to that 16 million level, which you had in the previous month here. So the number of transactions fall, and that's going to reduce the profitability for these miners. In other words, what the miners will then need to do, because the Bitcoin price is still currently suppressed here at 26,000, they will have to sell more Bitcoin to get to the same amount of fiat currency, okay? So this is why you're starting to see some selling here by miners. Now, jumping back into the chart here, guys, why are you not trading with me? If you want to trade with me, if you want to buy some cryptocurrency, Bybit is the exchange I personally use, Ijaz.uk/Bybit, to take advantage of some amazing offers. They are offering some really good bonuses, guys. If you deposit just $3,000 here, you're going to get $100. It's insane, right? For free. And you can trade with that. Similarly, if you've got a bit more, if you've got 20K, you get $800. If you're a bit of a big baller, 125K you deposit, or 250K, you can get up to 30 grand in deposit bonuses for doing nothing. They're just trying to incentivize people to sign up. So definitely take advantage of that. It supports the channel, supports you as well. It's a great interface. I personally use it to trade every single day and couldn't recommend it enough. Easy to use, simple. They list all the coins. It's good to go. Check it out in the description. What we do want to look at is where is the resistance being formed here on Bitcoin? If I jump down to the hourly, it's going to be very clear to you guys where this resistance is. It's at a previously drawn line, 26.2. we've had this orange line drawn for a very long time. And you can see how it held as support here at the bottom of our symmetrical triangle. We then held it when we broke down from the symmetrical triangle. We held it here as well. And now that support has now turned into resistance. And we can't seem to get above the overhead resistance on Bitcoin. When you then look beyond that, you then have resistance level here, right? Which is 26.6. And then you've got the top of the channel here at 27.3. So we've got a lot of overhead resistance here. And the problem now is if I zoom out to the daily chart, and you're going to have to ignore the lines, but I just want to illustrate a point here for you guys and bring out the EMA ribbon. What do you notice? This green line here, which is 26.6, also acts as the bottom of the EMA ribbon. So what we need to be careful of here is do not be surprised to see a move on Bitcoin. Bitcoin could indeed have a move up here, but the question is, will it just get rejected by the EMA ribbon, 26.6, and then get sent for another leg to the downside? That's what we need to be wary of right now here on the Bitcoin price. Things don't start to become exciting until we can work our way back toward 27.3, because then we're going to get back above our daily EMA ribbon, hold above it, consolidate, and then we can worry about all the other levels ahead of it. Because even once we do that, there's so much work to do, right? We've got to get above 29, then we've got to get above 30, which is this resistance here, and then 31. You guys know the script. We've got a bunch of work to do once we reclaim our daily EMA ribbon. But let's take baby steps right now. We've got to reclaim that daily EMA ribbon. And so far, you've seen that Bitcoin has not been able to gain any significant momentum. Zooming out to the weekly chart, you can see we're at a critical level here as well. We're into our EMA ribbon, trying our best to hold this EMA ribbon, and we cannot afford to close below 25.3. And that's going to be the question now that arises later on today, is will this FOMC meeting plummet us, rug pull us below 25.3? Unfortunately, we're precariously close to that level. We're not far off. We're talking the difference between $500-600 here on Bitcoin, which of course it can fall if Jerome Powell decides to rug the market. But what's so critical about that is if we lose our weekly EMA ribbon, then pain is going to come. We need to hold this weekly EMA ribbon, and we need to bounce above it and get above 31. Losing this EMA ribbon, we need to tear up the script and say, you know what? The momentum, which we're hoping for, which is a big move, bounce, retest, and boom, nice big move to the upside, that we need to rewrite the script on that. We can't have that by going below our EMA ribbon. That's not possible. FOMC meeting, markets are all in. They're all in. They're not hedging anything at all. This market is saying you are pausing today. 94% of the market is priced in that Jerome Powell will come out, given the CPI data early on today, and deliver a pause. That's where we're sat right now. Now, yesterday on CPI, we got a really impressive beat. Inflation was projected to go from 4.9 to 4.1. It came in at 4, which is really impressive. Big, steep decline here, down to 4% flat on headline inflation. Really impressive. The core figures also came in line as well. But today, we get the producer side of things, which is from the supplier side, to say what is inflation looking like. That came in at 2.3% last month, expected to drop all the way down to 1.5% at today's reading. And again, not as important as CPI, but that will be coming out within the next hour, maybe by the time I've uploaded this video. Make sure you're in ijaz.uk/TG, which is our Telegram group, which is free, to make sure you get the latest news as and when it comes out. Markets expect a pause. And later on today, when we're live streaming, if we do not get a pause from Jerome Powell, expect this market to really go and play with fire at 25.3. That could be a really painful level. Now, if we get some good news, if we get that pause, the question is now going to flip the script to say how much of the party can crypto benefit from? Because the reality is traditional markets have benefited from recent excitement, right? You look at the S&P above its weekly EMA ribbon. In fact, let's take a look here at how far off the S&P is from the lows, right? The lows here in October, you can see that the S&P is up 22%. Let's do the same for NASDAQ. Remember, we're more correlated to the NASDAQ than we are the S&P because that's the risk on stocks. Let's take that same low there, and let's take the move where we are now, up 40% on the NASDAQ. And the question is, Bitcoin is unable to participate because of the SEC crackdown, because of all the targeted choke point that US is placing on crypto since 2023 started. And that's the question. Yesterday, we had the Hinman documents released, a good step. Yesterday, we also found out that Binance.US's restraining order was denied. But I don't want you guys to get confused. Likelihood is that Binance.US assets will be frozen. All the judge said was for the SEC and Binance to go away and compromise together. Go figure it out yourselves. Don't get us involved just yet, right? Now, that is obviously a good thing because it shows that the judge isn't just swaying towards the SEC. Remember, this judge is going to try the whole case. The whole Binance.US versus SEC case will be tried by the same judge. So that's a good sign. But it doesn't mean that the assets aren't going to be frozen. High likelihood, assets will be frozen, and they're just going to agree some compromise where Binance can pay their payroll, pay their suppliers, and control some of the funds to keep the business running. Because that was Binance's whole argument, was that, look, they've not put forward any evidence just yet, but they're trying to kill our business through freezing our assets. There's no need for that, right? That's where the argument is. Now, they've got until Thursday, which is tomorrow afternoon, to agree and get back to the judge with what they've agreed. So that's where we then come back to Bitcoin and say, you know, you've got the NASDAQ moving, you've got the S&P moving, and yet we're frustratingly been declining here to the downside for the last couple of months because of this targeted FUD. And it's a shame, because when the markets were falling to the downside, we fell with the NASDAQ, we fell with the S&P, right? We were correlated. They didn't want to do their targeted FUD then. They want to do it now when we're getting closer to a halving. But the beautiful thing is that halving is baked in. That's not going anywhere. It's in the algorithm. And so Bitcoin's got this beautiful underlying mechanism where regardless of the FUD they want to spread, regardless of what they want to do, there's going to be a built-in halvening, scarcity increases over time. And that is why this is the best asset class known to mankind. Decentralized, immutable, right? We've got to remind ourselves of that conviction anytime we're facing the resistance to the technology. Another interesting observation, if you remember yesterday when Bitcoin was started off the day quite positive, you saw altcoins start to move. So there was this whole narrative that, oh, look, all altcoins are dead now because of the SEC case. No, guys, like I said, Bitcoin just needs to do its thing. Forget about altcoins for now. Bitcoin needs to do its thing. When Bitcoin does its thing over the next couple of years, altcoins will be there, right? Altcoins as a thing is always going to be there. They're going to be there. They're going to be competing. Yes, the US can go ahead and ban whatever they want to ban. That's up to them. Right? The US are probably trying to get to an environment where they've got Bitcoin, they've probably got 4 or 5 commodity altcoins and another 4 or 5 which are registered as a security, and that's it. They want a really closed loop, which they can control, and they probably lean towards proof of work altcoins. But apart from that, the rest of the world is still going to be moving into altcoins. It just needs Bitcoin to set the pace. And that is why we need to focus on Bitcoin right now. And do not be surprised to see Bitcoin dominance have a spike up. We want to see this happen. We want to see Bitcoin dominance start working towards the next level here at 52 and then 59. That's a good thing. Let Bitcoin set pace. Altcoins will catch up later on. Let the SEC have their moment right now, and this will catch up later on. Let's have a check-in on the dollar index. And the dollar index is doing exactly what we want. Remember, when you've got the dollar index moving to the downside, that means risk is rotating on, right? Risk is rotating on. Now, traditionally, when that happens, given Bitcoin was correlated to the markets, you would have expected Bitcoin to have a powerful 3 months in. But no, not only does Bitcoin suffer on these 3 weeks, but then Bitcoin suffers on these 3 weeks as well because the SEC timed their campaign, right? So Bitcoin cannot catch a break right now. If this was getting rejected from its weekly EMA ribbon, this is good news. We want this to happen. This is exactly what we want on the dollar index, for it to form this M pattern and start moving to the downside. Really important for us, right? That it stays below its weekly EMA ribbon, because that keeps risk on. But unfortunately, Bitcoin just hasn't yet had its move yet. And the question now is going to be, will Bitcoin just decide to explode? Will it decide, maybe after a pause today, or maybe even a little bit after that, to say, you know what, enough is enough, we're going to go fill a gap, and we're going to quickly, powerfully go up towards 31. And if it does, guess what happens then, guys? You still have, believe it or not, you still have your cup and handle pattern forming here on the weekly time frame. Yeah, it's still intact, right? There's your rounding bottom. You then have your handle of the cup and handle. You need a break of the neckline at 30, and then you can work towards your price target of 45, which is insane, I know. But remember, we fell so powerfully to the downside here. Look at this leg down. Look how quickly we fell on the way down here, and equally, you would expect it to fill that gap to the upside as well. In order to take a look at that, let's also bring out the VPVR, and you'll be able to see, once we get through these places here, once we can clear this volume here, this bit becomes very thinly traded. We should be able to start filling a gap quite quickly. Okay, so there are positives here in the market. We need to remind ourselves of the conviction and continue to look for those painful days to add to our portfolio. I know it's difficult, but ultimately you're going to look back and say, what did I buy in those moments? Or am I just like everybody else who ignored crypto, said it was a scam, fell out of love with it, and then next cycle, I'm going to hope that I do better next time. No, make this cycle the time that you do the right thing. Hope you guys enjoyed this video. Smash up the likes. Don't forget to subscribe. Look out for the FOMC live stream later on today, and I'll see you in the next one.